Clay Patton on the Rural Radio Network. Another week, another trading week coming to a close. It means it's time to talk with Darrell Holaday, Country Futures in Frankfort, Kansas, to try and make sense of the week's trade. Darrell, looks like plenty of negativity for the grains, but it looks like fundamentally speaking, maybe some weather can try and help shape things higher, at least in the U.S. What's your take on the week's trade?
Well, we had a mixture of two things. I think if I had to stand back, give me two things that really moved the market. And there's always more than two, but if I had to pick the two primary, would be the fact that we did see the weather model start to indicate that we're going to see more moisture in the central and southern plains. And those started showing up Tuesday, Wednesday for this upcoming week. They really reached their peak of how wet it was going to be about Thursday. And by Friday, things have toned down a little bit, but they're moving a little bit further south and east. But I think it's fair to say that the pattern is changing with some moisture, some systems moving out of the southwest rather than the systems running across the north. I think we all know what's been happening in regards to that. And I think we could say with some degree of certainty that's going to happen. How much moisture there'll be, how these models develop as we go through the weekend, as we get in, because the moisture is supposed to start returning in the first part, Monday to Tuesday. See how that develops, and it had some impact, certainly pressured the wheat, and the wheat kind of acted on its own off of that weather outlook. A lot of uncertainty about the Black Sea corridor still there, and even on again, off again. Is it working? Are they inspected? And then what we're going to do with the May 18th? The bottom line is, I like to tell people, the corridor will be there until it's not, and there's really no fundamental signal that would tell you anything there. And Ukraine grain is really making its way out through Europe too. So, not that the corridor wouldn't be important, but it doesn't have near the importance that it had 9 months ago. As they've kind of found their trail out through Europe, west of it in Europe, over the rails and even the ports, and that even has caused some problems within Europe because they don't like the fact that some of that grain isn't going to export; it's being dumped in Europe, and so that's another issue. On the second issue that really was there is the implosion and just overall glut that has returned to the Brazilian corn and bean market, specifically the soybeans. Just this crop. I'm sorry, but the market does not act like it's a 154 million ton crop. It acts like it's 158 to 60, the way the market basis acts. As we came to close on Friday, the beans for August export out of Brazil offered $3 below the same thing coming out of the United States. In other words, U.S. is $1.90. U.S. is $1.10 over, and Brazil's offering $1.90 under. $3 difference. That certainly opens up the window for more increased exports of beans, which we know are already, there's some occurring, but it would certainly pencil that you should certainly import more beans out of Brazil into the United States. That put the market on the defensive specifically late in the week. At the same time, the corn did the same somewhat thing. We're seeing about $1 to $1.50 difference in the Brazilian offers versus U.S. corn, and that is a negative influence, of course, and that pressured the market. But front-end corn, I don't really think you're going to see much corn move in there because the corn basis in the United States can react pretty quick. I'm not sure the soybean basis is going to make that type of reaction. Then we also saw some energy weakness on the week that at times it certainly had an impact, and it certainly was lower. So, again, we came off that big run-up the week before. That tended to lead over into the soybean oil and the soybean oil as a whole. But the soybean oil and the soybean meal all under a lot of pressure. Argentina has decided, we're not going to grow as many beans as we thought. They finally figured out it would be a bad idea to buy some of these cheap Brazilian beans and just crush the beans in Argentina like we normally do. There'll be Brazilian beans or Paraguayan beans and to be on the meal market. So that will probably shut off a lot of the soybean meal exports out of the United States. Once again, a pressuring influence as a whole. And we generally do see weakness in the soybean meal as we move into the summer. May corn on the week down 3 cents at 6.63. The new crop East corn, though, down 12 at 5.48. May soybeans down 17 at 14.83. November down 16 at 12.85. May soybeans 8.41 down 38, along with the new crop July 8.25 also down 38. June crude oil down 5.25 on the week, closing at 77.87. Had mixed trade in the livestock side, basically in the fed cattle. So we basically put some pressure on the front end with the cash market just weaker than maybe anticipated. Definitely steady to weaker in the south, 2 to 3 lower, steady mixed in the north. The spread moved out to about $11 or $12 as the spread didn't get narrower, it got wider between the north and the south, and that kind of pressured the April contract, live cattle contract, after a big run up early in the week. But we saw strength come back in the more deferred contracts because, again, they carry such a big discount to the cash. The wholesale choice beef kind of found an area around 308, having a little trouble getting through. Many anticipated that, but still the market's still very solid. Packers still have margin. They're cutting some hours, trying to strengthen that beef to some extent, but that really was generally the overall feature. Did see some signs of strength late in the hog market in the week as we saw some preliminary signs that maybe Packers are chasing some more hogs. With an idea that may be an indication that we're starting to see that product cleaned up. But that market has been under a lot of pressure, as we know. And we still have big premiums in the futures with the index. We just can't get the index above 72, and we're sitting here with June futures set at 85 to 86. On the deferred feeder futures were much higher. On the August, September, and October because of the continued weakness in the corn. Front end of the feeders a little bit somewhat more mixed. April cattle closed at 173.97, down 48. June cattle 164.52, up 80. April feeders 203.77, up 37. August feeders up 5.92 at 229.87. June hogs 80. Lowered 86.07, but off the week low. August hogs 89.95, down 57.
And that's Darrell Holaday, Country Futures, Frankfort, Kansas. You can always learn more at countryfutures.com. Do remember, trading futures and options involve risk of loss, may not be suitable for all investors. Do consider these risks before investing.